Now, it has rallied quite a bit in 2025. Now, though the levels are, the prices are scaling back. But if we talk specifically about the jewelry segment, silver jewelry is back in the spotlight today after the Indian government has clarified that import restrictions won't apply to 100% export-oriented units or those in SEZs. Now, the move follows industry concerns and that could ease supply worries. To understand what this means for prices, exports, and market sentiment, joining us today is Naveen Mathur from Anand, Rathi. Hi Naveen, good afternoon. Thank you so much for joining us today. First up, tell us how significant is this clarification from the government on silver jewelry imports for the industry and exporters also? Does this effectively remove the uncertainty that was created by the earlier notification?
Yes, particularly this particular clarification regarding the government policy on the import of silver jewelry has made quite a significant difference post the October clarification, which came from the DGFT with respect to imports which are related to silver jewelry for the players in the export zones like the SEZ, the special economic zones like the SEZ, 100% export-oriented units, the imports coming through the duty-free import authorization, and the people underneath. So I think that this particular clarification of October definitely gives a big respite and would help to stop the misuse from the other players, from a differentiation to the genuine players who are part of this markets for long.
Okay, understood, Naveen. But what about silver prices? How do you expect silver prices to react in the short term, both globally and on MCX, following this announcement?
The silver prices definitely are affected not just by the domestic scenario, they are affected by the international demand and supply and other factors too. I would say that the silver prices did touch the all-time high of $54.47 on the 17th of September, just a week back. They did had the last all-time high in April 2011, and that was around $51. So we just broke that record. Even in Indian markets, the silver prices on the MCX, which is the futures contract, touched a high of 1,70,000. We need to understand the dynamics behind the prices, which have touched all-time high. We are seeing the continuous deficit for the last 5 years in terms of the production. There has been the gold-silver ratio also has been showing that silver has lagged behind gold over the last couple of months and a year. So that was the other reason for the gold price, the silver prices to spike. There was a huge demand coming in from the global ETFs, including our domestic ETFs in silver. So all these factors with the supply deficit, demand being high, the investment demand into ETFs, even the central bank buying into bullion, diversifying their US Treasury reserves definitely was also, or I should say, is also one of the reasons for the prices to see an rise. Currently, as we stand and talk right away, it is the domestic markets are quoting at around 1,45,000 a kg, and the silver on the spot is dollar terms is around 47.50 cents. So I would say that the prices might correct a little from the highs.
Understood. So that's about the factors that are leading to the price movements, the price rallies that we have seen in silver over the past few weeks. But Naveen, about this import restriction which has been exempted, could this move boost exports in the upcoming festive and wedding season?
Yes, means that there was a deficit. Means we did saw premiums touching highs in the domestic markets at around 20,000, 25,000 rupees on a kg. But when the imports got stabilized around Diwali times, the correction has come in Indian markets and even in international markets too. As I mentioned, the current markets stand at around 47.50 from the highs of around $54 levels. So I think overall it would be positive for the categories which are exempted, which anyway were exempted earlier too. It was just a clarification which has come in from DGFT, and a very well intended move by the DGFT, very positive, very prompt, I should say, because of the festive season. I would say that would surely be benefit for the I would say units based out of SEZ or the 100% export units, or even for the units which are covered under the duty-free import authorization, which are DFIA. So I think that would benefit definitely, and all the unregulated parts of the business, which actually the DGFT wanted to cover through the licenses. Uh, would be on the disadvantage. So I think the genuine business of silver jewelry would continue to be at it, yes, but the organization, the units based out of these places would definitely, or have the licenses under the DFIA, would definitely benefit from this particular move. A very good clarification from the DGFT, and a very timely clarification, I should say.
All right, so very timely clarification coming from the DGFT. But lastly, Naveen, before we let you go, what do you have to say about the volatility we have been witnessing in gold and silver prices in the past few days? Where do you think both of these metals are headed? Any price targets that you could give us for the end of 2025?
Silver, since we were talking about silver, I will say 47.50 in the dollar terms. And Indian markets, as I mentioned, around 145,000 per kg. I might see a little bit of the downside, but the long-term trend would be bullish. Uh, Gold would play its role as a safe haven, continues to play the role as a safe haven as central banks, the ETFs, the people are moving out, the retail participants are moving in for the investments through ETFs in both gold and silver. So I would say that the demand continue to be strong with the geopolitics and the uncertainties in the global economies. So overall trend might remain positive. Even the Federal Reserve would be cutting down the rates in due course of time to stabilize the economy, and that would have a negative impact on the dollar itself, which would be positive for both dollar denominated gold and silver. I would say my personal gut says that we are kind of in a consolidation mode, so neutral to bearish as of now, but definitely positive in the long term for both and silver, for gold and silver. So gold, I think quoting at around 119, 600 per 10 grams, count of 125, 1,25,000 per 10 grams. And in case of silver, we would be at around 1,50,000 or so, where we would be consolidating, seeing the geopolitics, the economy, the demand and supply situation, and the investment demand coming in for gold and silver.
All right, thank you, Naveen, for that view. So gold could, that long-term bullishness continues for both the metals, but over the short term, some consolidation could continue. Thank you. We'll let you go on that note.